Good evening, everybody.
Good evening, sir.
Investments in associates. Who is an associate? Don't forget, when we start the class, I said we have line of investment. My line of investment so when we have investment between 1% to 19%, we said it's an associate. Simple investment. Well, today, we have investment from 20% up to 50%. What type of investment is this? We refer to it as associates. What is the guideline? Which accounting standard give us the guideline on associates? IAS 28. Who is talking about equity method? But what is most important in associates is when we have significant influence. Before you can call any investments associates, there must be existence of this word, significant influence. I don't know whether you have listened to the voice notes I have sent to the platform on associates. If you have listened to it very well, you will see how to go about investment in associates. Associates, there must be existence of a significant influence. What are the things to know? The definition of associates. Very clear. And other important concepts. Such as the definition of equity, transaction, definition of significant influence, definition of upstream and downward transaction. But that one, we can send a note for you to read. I even mentioned most of them in the voice notes. But my major concern is those items that we need to understand the debit and the credit aspects. After I have in calculation, after I've seen that it is associate. How do I know in calculation it is associate? By the time they say they acquired shares 20 to 50%, within this rate, they acquire 30, 40, 50. No problem. Definitely, I will know it's an associate. Before going further on what to know on associates, before going further on what we should be expected in associates, let me tell you how associate can be tested. Let me send one question to the platform. Let's start with that. How can they test me about associates? One, question can decide to give me consolidated statement of financial position. Two, it can give me consolidated statement of profit or loss. Three, both. Four, it can give me associates without its financial statements. This one is the one I don't want them to be giving to students, because students don't used to see it on time. Associates will not have financial statements, but it is good, no problem. They can give me the POL alone, and they can give me the statement, financial position, or both, making 6 ways. These are the 6 ways they can test it. They can test it. Now, what are those things that connect to associate for debit and credit? My brothers and sisters, it's only just 6 items. 1, share of profits. Share of profit. 2, share of loss. 3, loan to associates. 4, dividend paid by associates. 5, unrealized profits on inventory. 6, when associates impaired payments. These are the 6 items. These are the 6 items under associate. No question can carry the 6. What is my duty? Where am I going to debit and credit? 1, 2 places. Retain any of the parents, and I will open an account called investments in associates. If there is share of profits, which I will show you with calculation, retain any will be credited, investment in associates will be debited. Two, share of loss. I will debit retain any and credit investment in associates. Impairment, debit, credit. Dividend pay. You cannot collect dividend as a collection of profits. What is my own duty? Debit and credit. Loan to associates. I will add to investment in associates. The second leg will not come to retain earning. The second leg will go to second leg of this. Second leg. Loan investment. Credits. Then if there is unrealized profits on inventory, who is the seller? If parent is the seller, if associate is the seller. If parent is the seller, I will debit retain earning and credit investment. You cannot sell to each other and make profits. But if associate is the seller, I will debit retain earning. The second leg will not come here. The second leg will go to consolidated inventory because the goods is still with the parents. That is it. Now, I will use question to answer all of this for you. All of these items one after the other. I will use question but no question can carry everything. But we will use question to solve this. Okay, how do we go about it? Should we take a complex question? Or we should start small, small? I'm giving the class open chat. Should we start small, small? Or we should start big, big?
Let's start small, small, please.
It's massive. Small, small.
Yes, sir.
Let's go to, I've sent a question to the platform. Without the financial statement of the associates. Normally, they're supposed to give you associate, and they will not give you. They will just mention it as part of the notes. Now, in exam, you will endeavor to read everything. Or sharply, just look at it, scan through it. Is there any associates? Now, in the statement of financial position, we don't consolidate associates. In the statement of financial position, we don't consolidate. This is the principles. One, we don't consolidate associates. Don't forget, in SWP, but show investment in associates. As a line item. That's all. We don't consolidate associates. We only show investment in associates. So, in the profit or loss, in consolidated statement profit or loss, we only share profits of associates after tax. After tax. That is a line item in the P or L. That is all. So let's go to a question. King and Prince. King and Prince is on the platform. Just like what we have been doing. They now give me statement of profit or loss and statement of financial position. But if you read through it, on 1st of January 2020, King acquired 30% interest in Nice for 40 million naira. 30% is which investment? Associates. They did not give me the financial statement of associates. They only give us parent and subsidiary. But through the additional information, they said, yeah, we see that he has associates. What do I do in exam? Let me see. I will now open everything. I will open it and open it once. What is the requirements? Prepare King Group consolidated statement of profit or loss for the year ended at first March and statement of financial position. No problem with that. Without open, we'll say King Group or King Limited. Consolidated statements of profits or loss for the year ended. For the first March, for the first March 2020. POL. I'll quickly write it down. I have seen that he acquired associates. I will say revenue. The currency and in thousand. Cost of sales. Gross profits. distribution, plus admin expenses. Oh, he has investment income. Before the finance cost, I will now say share of associates profits. They will not say finance cost. We don't consolidate associates. No. We don't consolidate associates. We only show investment in associates. We don't consolidate associates finance costs. Thereafter, profits before tax. Then profit for the year. After that is done, I will now go and open statement of financial position. I will say consolidated. Statements. Consolidated statements of financial position as at 31st March 2020. Assets. No current asset. PPE. What is the PPE of the parents? 150. Plus the subsidiary. 200. Then I will go again. Investments. Next thing, we have investment 250,000. After investment, I will now put a line item. Don't forget, I will not add the third. Okay, no talk comprehending. I will now put, investments in associates. We don't consolidate associates. We only show investment in associates. Then after that, I'll put the goodwill. After the goodwill, I will now talk about the current assets. According to the question, current assets, we have 120,000 plus 110. Total assets. Equity and liabilities. and the liabilities. Next, I'll say share capital. Share premium. Retained earning, NCR. After that, no current liability, 10% loan notes. 45, could you move on? 10% loan notes, 45,000 plus 32. Current liability. $250 plus 120. That's all. To balance this in exam, what do I need to open? Let's open an account somewhere else. What do I need to open? In exam, it's okay. To balance this question in exam, I need good structure. How did they stand? I need good structure. So I need to open adjusted retained earnings of subsidiaries as per SOFP. I'll go to the question, what was the retained earning? 113,000. After that, we need to determine the net assets. Determination. Of net assets of subsidiary. Items. DOA, DOC, and POS. Then we need to calculate the goodwill or WOPU. For the goodwill calculation, goodwill, we'll write the formula. Cost of investment, add NCR, purchase consideration, net assets at the date of acquisition. Goodwill. Do you know where that's going to be implemented? I need adjusted retained earning. I need the retained earning of parents. I'll open as per SOFP, which the question has supplied me to be 155. Then I need to calculate NCR. NCR, date of acquisition. Then investment in associates. Or open. Which must record at cost. Then also, cost of sales because of the POL. That is the major calculation. Also, that's all. In exam, this is what I would do. After this is done, I will now be reading the question, then post. Let's go to the question now. The draft financial statement below related to King and its subsidiary place. But all figures are assumed to be correct. King is a publicly listed company, acquired 24 million shares in Prince on 1st October 2019. Oh, he has given me two information: the number of shares acquired for the purpose of calculating group structure, and the date of acquisition. Date of acquisition said it is 1st October 2019. When do we consolidate? 31st March 2020. This is not up to a year. October to December, 3 months. January to March, 3 months. This is a count of 6 months. I'm preparing for 6 months. What will come to my head? No retail earning. And he said he acquired 24 million shares. I'll go and get the total numbers of shares. Total numbers of shares is subsidiary because the values of shares all over nominal value, which is 30,000. Divided by the nominal value of 1 naira to give me 30,000. You only acquire 24 million shares. I can determine the group structure. 24 over 30 times 100. What does he give us? What does he give us?
80%.
80%. I will do as if I did not see the POL. Immediately I balance my financial position, which will take in the next 30 minutes. I'm done. I will now go to the POL. 80%. This is the last aspect of the group account for FR, which is the beginning of CR. So I'll go and post parents. 80%. This year, 20%. That's it. For a consideration made of a share exchange of 2 shares in King for every 3 shares acquired in Prince Wow. Share consideration. He has given me the exchange ratio. Yeah, part of, don't forget, share consideration can be tested in two ways. It's either they give us the exchange ratio or they issue it direct. They've given me the exchange ratio. Which is must be parent over subsidiary. And the question says, a share exchange of 2 shares in King for every 3 shares in Prince. 2/3 times 24,000. 2/3 times 24,000. 2/3 times 24,000.
16,000.
Hmm?
16,000.
16,000. Don't forget, it must be issued at the market price per shares of the parents. It must be issued at the market price per shares of the parent. I'll go to the question. They give me the market price per shares of the parents and a cash payment of 2 naira for every shares acquired in place to be paid on the date of acquisition. Only the cash consideration was recorded in King Book on 1st October 2019. The market price per shares in King and Prince 3 naira. Oh, they even give me that on the subsidiary. Don't forget, apart from the share consideration, they also say it's going to pay 2 naira per acquired shares. But let's deal with the share consideration first. In the process of dealing with the share consideration, they now give me the market price per share of subsidiary, which is an indicator that it is fair value. What do I do? Very simple. What must be done? Very simple. I will now go to the question. You have given me market price. I'll stop the share consideration. Quickly go and post. You have given the market price per share of subsidiary 2 naira. It's an indicator of fair value. Because how do I know it is fair value? Market price per share of subsidiary or NCI will be given at date of acquisition. Fair value of the own subsidiary or fair value of NCI and the goodwill attributed to NCI. One of these one will be tested. And he has given market price. What is the group policy? I'll go and check the group policies. If you go to additional information 7, King has a policy of value not controlling interest at fair value at the date of acquisition. Accordingly, the share price of Prince should be used to value not controlling interest. What is it to naira? I'll quickly post that to end my mark for the goodwill. It's okay. NCI at the date of acquisition. Out of the 30,000, he acquired 24. 6,000 belongs to NCI. Times market price per shares of subsidiary 2,000. That will give me 12,000. Goodwill NCR 6,000. Wendermark. I will now go back to the question now for the share consideration. What is the market price per shares of the parent? 3 naira. I will now say cost of investment to be debit. 16,000 times 3. Equity shares, 16,000 times 1. Has it created a premium? Yes. Share premium. This will give me 16,000 to be credit. The share premium, I think it's 32. Cost of investment, 48. If it has not been recorded, I will record this.
Sir, cost of investment should be debit, right?
Sorry. Thank you, my sister. Debit. That is it. That is it. Next, I will ask, has it been recorded? Said, and cash payment of tenure for shares acquired in place to be paid on the date of acquisition. Only the cash consideration was recorded in King Books. Shares has not been recorded. I'll go to the question. Cost of investment debit. For the grouping calculation, cost of investments, equity shares. I'll go to the share capital. What is the share capital of the parent? According to the question, the share capital of the parent is 50,000 plus credit 16,000. Share premium of the parent 20,000 plus. That's all. Any question? Ask your question. A minute. In the absence of no question, now there's no question. You also pay cash. Get funeral paid immediately. For the cash payment, you are seeing additional information. One, funeral. Also cash payments. He acquire 24 million shares, which is 24,000 times 2 naira. 48. So cost of investment debit, 48. It has been recorded investments credit minus 48. It has been recorded. That's all. I'll go and post this in financials now. By saying, yeah, investments. Go to the goodwill calculation. In the goodwill. It happens to give us the same figure. Forty-eight plus 48. That will give us 96,000. 96,000 plus 12,000 to get the purchase consideration. What does it give us? 96,000 plus 12,000.
108.
108. Additional information 2. At the date of acquisition, the carrying value of the net asset of Prince were approximately equal to their fair values, with the exception of land, whose fair value assets to be 20 million below the carrying amount. Below. I'll just go to the question. Is below the carrying amount. PPE credit minus 20,000. I'll go to the reserve that I've opened. The net assets. That's I'm going to pick the share capital. which is 40,000. The retail I will not bother because it is doing the acquisition. It is doing the year acquisition. So I will not bother about the retail earning. I will say, okay, then revaluation deficit on land, 20,000. I will not wait for depreciation because we are talking about land. Credit the PPE and debit the reserve. That is done. During the post-acquisition period, Prince sold goods to King at agreed price of 2 million per month. Oh, they are selling to each other 2 million per month. In the post-acquisition period, you cannot sell to each other because you are a single entity. Intergroup sales. Intergroup sales. He said 2 million per month. So, and we have 6 months that we acquire times 2 million. 2 million is 2,000. So, equals to 12,000. Our first of all say revenue debit minus 12,000. You cannot set to each other. Cost of sales credit minus 12,000. You cannot do what? Set to each other. You can post that. I'll go to the question. Revenue. Your head. Revenue of the parents. I will check. Which is 80,000. Plus 75,000 times 6/12. Because we only acquire for 6 months. Out of the 75,000 for the whole year, they minus 12,000. That's all. Then I'll go to the cost of sales. What is the cost of sales of the parent? I've opened cost of sales down after investment in associates. Parent cost of sales. Parents. What is the parent cost of sales? 30,000. So, cost of sales, 25,000. Intergroup sales, to be credited. Any question? Any question?
Sir, there is question, sir.
Ask your question, my sister. I am with you 100%. Oh, yeah.
For the share under determination of net assets, where did you get the 40,000 naira from? Share
Where do-
capital.
Share capital of subsidiary in the question is 40,000.
It's 30,000.
My sister. Thank you. We are going to
That's-
be looking.
I have another one.
That one, you have correction.
Question.
Another correction? Yeah, go ahead.
No, not correction. This is, I
Another
have
correction, go ahead.
It is not a correction, sir. It's a question.
Okay.
Out of the 5 cost of investments, you have only taught us 3. You have not taught us contingent and loan notes. Is it that they don't come out in the exam? That's why you don't bother, or what?
We have done contingent now.
We have not done it. Contingent and loan notes, we have not done the 2.
Are you
We have
sure?
only... Yes, very, very sure.
Have we not done very question, Bola?
We have not done Bola. We have only done share consideration, cash, and deferred consideration. Those are the 3 that we have done on online group. We have not done loan notes and contingents.
Really?
Yes, sir.
Let other students. Abiodun, is that true?
I'm the one talking now. It's Abiodun that is talking.
Okay. I agree. There is contingent consideration. You will know it, don't worry. There are so many questions there that has contingent that I've sent to the platform. I don't know you have not done any. If you are reminding me of this, we will not have done to this. Although there is associate that have contingent. Don't worry. The next question you are going to do, it is going to be contingent and it is on the platform already. Go to CAT, go to Bola. There are so many. Contingent and no notes. I thought you have done it. So sorry for that. Any other question? You see that it's not correct question. It's correction again. Any other one?
Another question.
Another question, yeah.
From the beginning, when we have unrealized
Profits.
unrealized profit on inventory, it affects our retain any of the seller and the consolidated inventory. But in this case now, it's only affecting the cost of sales and revenue. Is that all?
No, I have not finished.
Okay, sir. Thank you.
What is affecting sales and revenue is the total sales. Unrealized profit on inventory is about unsold. The one you have not sold, that you have put profit on it, we have not read that. Immediately we read that now, we will not see the treatment. But we have done POL before now. We have done POL before. Go and look at the treatment. Question like, aya. You cannot tell me that we have not done profit. It's not possible. So I will eliminate intergroup sales, the total sales. Then the unsold parts will now go to the seller and the inventory. Then the unsold part will also be added to the cost of sales. I'm just showing first on total intergroup sales. Now let us narrate, is there any goods that remain? The goods now says, okay, only 1/3 of the received goods were held at the end. 1/3 is unsold, held at the end. And please charge a markup of 12% on the dispatched goods. This is when I will now calculate unrealized profit on inventory. He has told me 1/3 is unsold. As of the 12 million total sales, 1/3 is unsold. Piodun, is it clear now?
Very clear, sir. Thank you.
Oh, that's okay. That is the first thing. The second thing, okay, we have unsold. Unrealized profits. Inventory. This one we did, it only happened when there is what? P or L. If the question gave us P or L. And if it did not give us P or L, I will just do the unrealized profits in inventory below. Where we have P or L. So total sales is 12,000. Unsold, sell 1/3 of 12,000. That is 4,000. At a markup of 25%. On unrealized profit on inventory, now equals to 25/125 times 4,000. What does it give us?
800.
800. Now look at the treatment. Who is the seller? At the date of Prince sold goods to King. Subsidiary is the seller. I will debit retain any of subsidiary. Cost of sales, look at it. Unrealized profit will also be added to cost of sales. So, unrealized profit on inventory. I will add it to the cost of sales because it's going to be the P or L to reduce revenue. Then I will now go to the seller. Who is the seller? Subsidiary, Prince. Why do you sell and make profits from your subsidiary? Unrealized profit on inventory. We'll now go and credit consolidated inventory. Then the inventory minus 800. That's all. That is all. Now, any question before we proceed? At the year end, King's book show at the end, King's book show a standing balance owned to Prince of 10 million. But Prince record is showing a receivable of 15. Prince is saying King is owing me 50 million. The other one is saying 10 million. Okay. The difference arose because King has dispatched a check worth 5 million to Prince on 30th March, which has only received on 2nd of April. It's in transit. What is the total trade receivable? 15 million. You cannot owe each yourself because you are a single entity. Trade receivable minus 15. The check that is in transit. Trade payable now. That's all. That is all. On January 2020, King acquired 30% interest in Knight. Oh, 30% is an associate. %30. For 40 million. King reported a profit. When does he acquire it? 1st of January. So you acquire associate in 1st of January. Investment in associates. Date of acquisition, 1st January 2020. Now the 1st March 2020. This is 3 months. At a cost of investment. How much does he pay for it? 40 million. The question is silent. Recorded. Profit after tax of associates, 27,000, 27 million. And that's a share of profits now. Share of profits. Of associates. (0.3 times 27 times 3/12. That's all. 0.3 times 27,000 times 3/12. What does it give us?
2025.
2025. In the statement of financial position, retain any of the parents will be credited. Retain any of parents. Credits, 2024. Investment in associates. Debits, 2024. That's all. I'll go to the question. It has been recorded because it is silent. We move from investments. Credit investments minus 40 million. I'll go to investment in associates. Record at cost. $40,000. Share profits. I'll go to the question. Retain any of the parents for credit on share profits. That's all. Impairment review conducted on the 31st of March 2020 reviewed that the investment in Knight has suffered impairment of 1 million. Who is Knight? associate, impairment, associate. We'll go to investment in associate and credit. Impairment. Is the good policy. All income and expenses don't accrue eventually. That's the end. But in order not to forget, I'll go to associate. Share of associate profit. Made a profit of 27 times 0.3 times 3/12 minus the impairment. That's all. We don't consolidate associates. In a statement of financial position, we show investment in associates. In the statement of POL, share of associate profit after tax. With this now, I can now consolidate, but I need to determine the net assets. The date of acquisition. I need to retain any. I will apply the formula. It's okay. Retain any, the date of acquisition, plus year ended, profit or loss, equals to retain any at SOF. What is the retain any at SOF? 113. Profit for the year. We only acquire for 6 months. 30 BK. What is K?
$101,500.
Okay. 101,500. What do I do now? I'll go and determine the net assets. I have gotten my retain any 101. $101,500
Sir, we have share premium for the subsidiary.
How much is the figure?
15,000.
15,000. Thank you. You are super ready for this exam. Next, yeah. Yes.
126,500. 126,500.
126,500. I will not take it. $126,500. This is not good way. This is gain on purchase bargaining. What is the figure?
18,500.
18,500. It is fair value. I will not share it between the parent and SCI. Because when it is fair value, the goodwill belongs to both the parent and SCI. So yeah, 8,500. When I say share of profits. The share of profits. Share of gain on purchase bargain. 0.2 times 18,500. What does it give us? Then the parent will also collect the remaining one. Gain on purchase bargain. 0.8 times. Give me the figure.
$14,800.
14,800. The NCI income.
37.
NCI 37. That is it. The next one is that it must be shown as a line item in the statement of profit or loss. So I'll go to the, I have opened in exam, I have opened everything, but that will not stop it. I'll find a way to put it as line item. There is no particular space they say you put, but it says it must be shown. So I'll just say gain on purchase. I don't know it will be gain on purchase, but again will occur. But that will not stop me from opening everything. 18,500. That is it. it must be shown as a line item. But that will not stop me from putting it somewhere. And that will not stop me from not opening my book. Because it is very rare. So, any issue? Next. I am done. I'll just go and determine the post, then close my book. One 3 minus this, 800.
112, 200.
112, 200. I'll break it down. One hundred 12, 200. One hundred 12, 200 minus 105, 500.
10,700.
Share of profits now. Between the parents, share of profits. (0.8 times 10.7). The next year. 0.2 times 10.7. That's all. 0.8 times 700.
8,560.
8,550. 8,500.
560.
That's the end. Jacob.
37. Oh no, sorry, 2,140. 2,140.
That is the end. We can now consolidate. What is the returning? Okay, let's do it together. Please press your calculator. While I press mine. 155.
170.85.
What do you get?
179,385.
Yes. The next year.
17,840.
Plus 2,140. 17,840. That's the end. You can now go and consolidate. End. Let's see here. Let's see here, 17, 40, 52,000. 66,000. What is the figure for the retaining?
179,385.
179. This one will give me 45 plus 32. 45 plus 32. 77,000. Then 250. Plus 120. Minus 10,000. 360. We'll go to the question, no more goodwill. Goodwill dash. 150 plus 200 minus 20. 330. Then investment, 250 minus 48 minus 40, 162. Investment in associates, that's 1,725. That's 1,725. Current assets, 120. 120 plus 110 minus 800 minus 15,000 plus 200. Assets 3 plus 162 plus 219. Well, yeah, next one. What does he give you? Summit. Let's get the figure.
752225 for the total assets.
Total assets.
752,225.
Yeah, let's compare it with 752,225. Let me write that down.
Balance.
What does it give us?
The same answer, 752,225.
752,225. 752,225. 752,225. I'll now go to the POI, which I've done to some revenue. I would say 75 times 6 over 12. 75 times 6 over 12. So you give me 105. 105, 500. I'll go and get the cost of sales. Cost of sales. $25,000 times 6 over 12. 25 times 6 divided by 12. 12,500. Total cost of sales, 30,000 plus 12 minus 12,000 plus 800. 31,300. I'll bring it down. 31. This will give me the cost of sales, 105, 500 minus 31, 300. 74, 200. Distribution costs. What is the distribution cost of the parents? 85 plus the sub, 12,500 times 6 over 12. So give me 14,750. Admin expenses, 35 plus 15 times 6 over 12. What 250. Gain on purchase bargaining. Investment income, 500. Share of associate profit, 1025. Finance costs. Zero plus 1,000 times 6 over 12. 500. What is the profit before tax? First one. 24,200 minus 14. 74,200 minus 14750 minus 4250 plus 18,500 plus 500 investment income plus 1025 share of associate profits minus 500. 74,725. 74,725. The tax. What is the tax of the parents? 9,000 plus 12,000 and 6/12. That will give 15,000. Profit for the year. 7 for 75 and 15,000. 59,725. And that's a profit attributed. Profits attributed to NCR parents. 29,725. NCR. I'll go and take the post. The post is 10,700 times 0.2. If it is during the year, take the post. 10,000 times 0.2. 2,140. That will give me 59,725 minus 2,140. 57,585. That's all. That is the parent's own. 9,725 minus. Any issue? Any issue? You have any issue? Are you there?
I'm there, sir.
Any issue?
No issue from my end.
Other member of the class? Is there a problem? So the next question we are going to do, if you have contingent and loan, go to CAT PSC. You will see it there. So it's contingent, we are going to do 2 questions of contingent. And God's grace next week. So the answers of no question.
Are you sending the question to us, sir?
Which question?
The question you just mentioned now. Oh,
Is it not on the platform?
Not on the platform.
Let me check. I thought I've sent it to the platform. Maybe.
It's only King that is there.
Zoli King.
Yes, only King. King and Prince. That's the only question on the platform.
And you want question to be there. Don't worry. But you will see question from two. A sense question and solution investment. I will add to it tomorrow again. We are going to see about 10 again. So, see you next week by God grace.
Thank you, sir.
No problem. Do I need to send this one?
Yes, sir. We need all of them, sir. Thank you.
Okay.
Even the beginning, the network was really fluctuating. That when you are treating an associate, what is there and what is not there, sir, please, we need it.
Go and listen to it now on the, I'll send the first note.
Now I want to see the things that you wrote out. My network was timing me out. It was just logging me out. I didn't get that aspect.